Good morning, everyone. Welcome to the European crossover webinar. We just got the flash PMI for Eurozone, which came in at 33.6, with services at 11.7 and composite at 13.5. Obviously, lower numbers than, well, actually, even the poll. The poll came in at 39.2, came in at 33.6. Services 23.8 was the poll. Actual was 11.7, and then composite was going to be 25.7. So boy, actually lower across the board. We're seeing euro actually come off a little bit off of these lows. I just mentioned in the chat room that move this out of the way, that the analysis for today, the support comes in at the pivot, this weekly pivot. You pull this back. Actually, the way this is, the charts kind of mashed together, actually works to the benefit, because you can see the significance right here. You can see why 776 is key. So that's why I have that as the pivot. So I'm having it on a weekly chart going back to 2017, and you can see the significance. So that's actually today's bias chart support, and the low for today has been 786. So it missed it by 10 pips. Move back to the daily. Here we go. And then you can see that 776 goes way, way back, all the way to 2017. And you can see when the market is sold off from 1231, it stopped at 776 right to the pip. Then it bounced off of that all the way up to what, almost 700 pips, and then came back down. Once we got below it, obviously, like I said, the pivot, then it turns, bearish. But when we dipped all the way down to the sixes, that's when we saw the market kind of make a stand here. And then we got back. Once we got above 770, you can see how we closed there on that day. Then we took off. So there you go. There's the idea of the pivot. Turned everything back to bullish. We took off like a scalded dog. Made up to about 14 and a half, 14 and 3/4, came back down. And where did we stop again? At the pivot. I took it out by a few pips, but essentially the pivot, we never closed below it. And so once again, that's going to hold. So if we break towards the end of at the end of the week, we would break lower if we got past 776 with any holding power. But anyway, just want to go and stress that since we just got the data just come out. And really, that's probably maybe as bad as it gets if you think about that. We start out the morning. Go back here. So we had German consumer sentiment, and once again, just comparing this compared to the Eurozone data. And then we had French PMIs, okay? Reuters Pulse was 37.5, came in at 31.5, with services also even much lower, and then composite also much lower than what the polls were. And then we heard the German data come out. Once again, you can see here that flash PMI, services, and composite all came below what was the poll numbers or what the poll was. And then we just had the Eurozone. So once again, I think we may have put in, at least on a short term, may have put in the bottom. So we're coming off this a little bit. So hence maybe out of the woods for now. And that 776 is maybe well defended. As we go into the rest of the day, we do have a UK flash composite at the bottom of the hour. They're looking for 31.4 with manufacturing at 42. Flash services at 29. Then we have some Mexican data at 7 a.m. Eastern, which is important if you trade the peso. Building permits here in the States at 8 a.m. Eastern, with initial jobless claims at 8:30 Eastern. One of the things they'll probably be focusing on is continuing jobless claims, I would think. And we do have here in the States at 9:45 Eastern, market manufacturing PMI, flash, manufacturing and services. So that'll be a mover. That's 9:45 Eastern. And then new home sales at 10 a.m. Eastern. And then basically this is a third tier data, which is the KC Fed manufacturing data. So a lot of data today, obviously moving the markets around. Let's move this out of the way. And we'll take a look at the, going to the SPOOs. So we're actually holding here right now at the point of control, but just below the VWAP. You can see that. We've made another run up in here. If you were around here in the US session yesterday, I was looking for a move for 2804. And we got to like 2805 or something like that. This actually looks like it tried to push a little bit high. Yeah. So right up in here. So you can see here, the high I think was like 2805 and a quarter. Actually, I'm seeing an 8. I don't remember seeing an 8, although it says it right here. When I saw it, I remember it was 2805 and a quarter. So I don't know. The system says it got up to 8. I didn't see that unless it was on one contract, 2 contracts, because when I was looking at it, the high I saw was 2805 and a quarter. It might have been 2805 and a half, but I know it didn't go anywhere beyond that. And then, but once again, it was in the last. I got short at 2804 and a half, and it was in the last 7 minutes of trade. And I don't hold over whatever, like hold over the session. So I ended up scalping out as we dipped back here to 1, and then all of a sudden the market really came apart late in the day and sold off quite a bit. I think sold off like about 20 handles. And then we dipped back and forth. Actually had some resistance. You can see here at 27.96, but you can see when it hit. Actually, we hit a little bit later on, at 10 p.m., almost there. We dipped back, and then we rallied back up in here, and we got back up to challenge of 2805, and here we are lower. And we're kind of pushing lower, although once again, we are below VWAP. 30-minute wise, it's still on a buy mode if you look at the exponential moving averages. And this is I just updated these just a little while ago. So key support, let's take a look at this. 2774. Remember the 2774 is key. Remember I took a stab on that yesterday in the European session. I think we made it up. We just about made it up there, I think it was, or maybe I think we stopped around 72. I'm trying to remember. I remember 69 was key, and then we dipped back, I think, to about 69 or 68, and then we started to move back up higher, something like that. I'm trying to remember. I remember yesterday saying in the U.S. session that 2769 was key in European trading, and it was basically a hold or fold them. And it actually turned out to be just that. From there, we rallied up about 10 handles. We came back down. We took out the 2769. I think we took it out by about 3 handles, but we came back above it. So from there, the market took off and never looked back until we eventually got up here, and then we rolled over. Always, one thing about the SPOOs, it always remembers the handles or handles the numbers. Unlike other markets, I'm not saying that they don't remember. You see that a lot in the euro, but the SPOOs always remember the handles. They always remember the levels. They always, you'll see a level with the market was key. So yesterday I was saying, hey, look, I was looking for 2804 with 2809 on a stretch. I thought, but once again, like I said, it shows here that I never saw this. It said we got there. I did not see that. And I was watching it close as can be. I saw the high was 2805, I think, and a half. I believe it was. And I got short at 2804 and a half. I did not see this stuff come up to 08. I think that's an error. But, I mean, unless, like I said, it was 1 contract, 2 contracts that supposedly got up there, but I was looking at it at the time. But anyway, that being said, that's where we are right now. Haven't done any work with Nasdaq. I was just kind of working on the SPOOs when I came in. I did, I wasn't up during this time. I would have liked to have been, but anyway, I think Martin got short, and so did Jane. Up there yesterday in the U.S. session, above 28. I think they both got short around 28.01, and they ended up holding. It wasn't my thing to hold. I don't like to hold beyond the session. And then we were already close up there. So, but anyway, that being said, so that's where we stand right there. We'll go and take a look at the crude oil. Here's June. We're 1480. We have rallied as high as $16. We've been all over the place. Look at this. At well, my time 7 o'clock. I mean, but maybe like around 7:10, 7:15. We got as low as 1340. Rally up. I mean, these moves have just been something else. I mean, I guess when you look at it, when the market was trading at $40, but when you look at on a percentage basis, the swings are pretty big here. Although from a dollar standpoint, I know a lot of they've raised margins on this. Some of the brokerage firms are not even allowing trading in the June. Matter of fact, one brokerage firm, a well-known brokerage firm here in the States, they are not allowing trading in the June or the July except to exit positions. Here we are in the July. But I guess I can kind of see their point. Honestly, I guess with some people, I guess I just feel like they even almost have to save them from themselves. There we go. That's July. And even they're not even allowing trade in July except to exit. And then you take us all the way back to August or take us forward. Maybe people are running into August, I guess, because actually the trading isn't too bad in August. But anyway, and I guess they may be using that as a proxy, for the others. You see here. But anyway, that being said, Interactive Brokers took an $88 million loss 3 days ago with customer accounts. We mentioned that in the chat room yesterday in the U.S. session, how it's crazy because people, I don't know why they'd be trading in the May contract at the time, but people were literally wiped out. Not only was it bad enough to be wiped out, but not only were they wiped out, they were actually indebted now to the brokerage firm, tens of thousands of dollars. It's crazy. I honestly, I said in the brokerage firm, we'll move on. I don't get it. The SPOOs are as liquid as all get out. You see all kinds of good movement. What the H are you doing trading in May crude oil futures? I mean, I was joking that day saying, okay, I'm going to buy it at 1 penny. I didn't even know that it could go negative. You know what I mean? But negative, it sure did. But anyway, that nonetheless, looking here at the gold market, we did make another dip yesterday. And well, actually not another dip because this is what we were yesterday. We talked about that and it came off. So we've actually been adding higher. Anyway, with that being said, let's go on and move on to the news. And bear with me. So the Australian-New Zealand dollars enter calm spell ahead of data deluge. The Australian-New Zealand dollars marked time on Thursday as global markets braced for a round of factory surveys that were likely to underline just how much damage the coronavirus had done to economies everywhere. In one of the calmest sessions for weeks, the Aussie sat still at 63.05, well within the 3 weeks relatively tight range. The Kiwi was also shade softer at 59.40. Investors are awaiting a welter of flash surveys on manufacturing services from around the globe, which are expected to show drastic declines in activity. In Japan, its services sector shrank at a record pace in April, while factory activity also contracted. Australia's own survey from CBA and IHS Market Survey showed a huge 17-point drive in its overall activity index to a record of 22.4. Any number below 50 implies a contraction. Most of the damage was done in the services sector as lockdowns and social distancing shut cafes, restaurants, and hammered tourism. The overall result is simply astonishing, said CBA senior economist Gareth Aird. Company shutdowns, government restrictions, and steep falls in customer demand have effectively seen private demand collapse over April. New orders decreased substantially, and the shock to global demand was picked up by a big fall in new orders from foreign customers. That was a disappointment as exports had recovered sharply in March. Preliminary figures from the Australian Bureau of Statistics shows exports of goods jumped 29% in original terms in March. There was a particular steep increase in shipments of iron ore to China as Beijing reopened its economy. While Australia had considerable success in containing the virus, the government has indicated it will likely still be a few weeks before restrictions can be eased. At least the government has no trouble in selling the amounts of new debt to pay for such needed stimulus measures. On Thursday alone, auctions of $5 billion in new short-term notes drew bids worth a hefty $20.6 billion. Yeah, the Aussie auctions they're just been fantastic. People can't get enough of it. So well done on there for them. Moment. And let's move on to the dollar. Dollar gives up gains against commodity currencies as oil recovers. The dollar erased gains and fell against the currencies of oil producers on Thursday as a rebound in crude prices after an unprecedented collapse in calm markets, unnerved by the massive coronavirus-led drop in global demand. The euro held steady against the greenback and the pound ahead of a meeting of European Union officials on the bloc's response to the economic turmoil caused by the global coronavirus pandemic. It may take EU countries all summer or even longer to agree on how exactly to finance and to help economies recover as major disagreements persist, a bloc official said on Wednesday. The greenback initially shrugged off the rebound in oil prices because the gains were slight. However, the dollar lost strength as oil futures extended gains, which decreases the safe haven appeal of holding funds in dollars. The dollar oil trade, the dollar rose when commodities fell, but this dynamic is starting to not work, said Masafumi Yamamoto, chief strategist of Mizuho. The dollar is not strong against other currencies. This shows that the foreign exchange market, at least, is starting to stabilize. Against the Norwegian krona, the U.S. currency gave up gains to fall 0.7 to 68.94 as oil prices rose. The greenback fell 0.8 to 75.38 Russian rubles. The dollar edged lower against the Canadian dollar to 41.34. The greenback initially rose against the Mexican peso, but then reversed course and fell to 24.38, retreating from the two-week high. West Texas Intermediate rose 10.16% to $15.18 a barrel. On the front month, WTI plunged to a historic low of more than minus $37 as a glut of oil dwindling capacities to store it sent oil prices to in a tailspin. Those gains pale against persistent investor concerns about the collapse in demand for oil as major economies have been brought to a virtual standstill with stay-at-home rules with severe restrictions on businesses. Countries are running out of space to store the oil, and they are not using it, which could lead to further disruptions for commodities and other markets. Officials from the EU will discuss the bloc's response to the economic damage collapsed by the coronavirus later on Thursday. However, markets are wary because it's uncertain how far the EU governments will cooperate in financing the recovery from what is sure to be a deep recession. Ahead of the outcome of the meeting, the euro held steady at 8.28, but of course, like I said, we've moved lower since then. The ECB has agreed to accept junk bonds as collateral to allow banks to refinance themselves at the ECB, which should be a positive factor for the euro, but investors are waiting for details on the fiscal response. So at least for now, you can see here, we talked about this, and we'll look at let's pull up the analysis and get ready with the bias chart. So here's the analysis. I posted this in the room because we were moving lower and we had the data coming out. So the euro closed lower, and like I said, I do this Asian update during the Asian session. Sometimes I do a little bit earlier. Last night I did it a little bit later, like around almost 10 a.m. 10 a.m. almost 10 p.m. Eastern. But anyway, you can always go into the under basic technical, and that's where I have the analysis. But anyway, that being said, the euro closed lower on Wednesday, albeit within the constrained range, and this is that constrained range I've been talking about. We've been very tight all week long. The support level will be the weekly level of 776 that will work as a pivot. Resistance is 882. Well, we talked about this and we showed this earlier. If you look on a weekly chart, and I even mentioned here, kind of good that the way this thing got mashed up, because I could clear it, but actually you could see it more clearly, the significance, because this goes back to 2017, the significance of 776 as a weekly pivot. Going back and recapping again, remember when we went from 1231, we fell all the way, we literally stopped to the pip at 776 before rallying 700 pips and then falling back. And as we went through 776, it exacerbated and the market pushed even lower. Despite as low as we were, we pushed even further. And then the market stabilized. And remember, look how we kept taking stabs above 776, but we couldn't close above it. Look here. You see that? Stab here, stab here. Once we close, you see here, right there, we closed on this day above 776, then off to the moon we went. And then we rallied from there, we rallied 700 pips here. Not 700 pips, but 400 pips. And then we rallied back, and where did we stop? Took it out by a few pips, 776 on back-to-back days. Then we rallied back up about, about 250 pips, and then we rallied back, and here we are now. Now, we just had the PMIs. So when you think about it, we've already got all the data out of the way, and it disappointed across the board. So if it disappointed across the board, we've got all the European data out of the way, then you can feel that, and actually we're seeing it right now. We're actually above 108. Now because remember we're at 786, now you can feel, okay, we've dodged the bullet and probably will work a little bit higher. So anyway, that's the take on that. So 776. And we'll go with 882. UK data is at the bottom of the hour, so we want to be aware of that. Let's go and move into the cable. SPOOs are 2787 now. We've held that area, that 2780. We're actually above the VWAP. I'm not doing anything with it right now. Like I said, honestly, I'm a bit frustrated because, like I said, I sold basically the very top right there, but within one handle or so yesterday. But once again, I don't hold over the session, and then we took that. Then we fell 20 handles after that, and that was frustrating because all I did was scalp out of it. So I'm not doing anything right now, and I mean I will, but I mean not at the moment. And then of course, like I said, I wasn't out when we rallied up to 2805. So let's take a look at the cable. Cable continued to defend the 2285. You can see that there. The risk into the backside of the week, which means tomorrow, remains lower. Support will be 2217 with resistance at 2408. Well, we're still holding here. Look, even though yesterday we kind of held them here. Oh, by the way, gold's at 1750. So gold's punching back up here again. We're still pushing a little bit higher, albeit in a very tight range. Boy, that gold is really popping up. I just want to swing this out for you real quick. Look at that. Boy, look, quite a jump. Let's move this all the way. Anyway, so we're still trading. I mean, I wanted to give it some room. And we're actually expanding the ranges because, you know, this week we've been trading it relatively tight. I mean, as far as the bias chart, it's actually worked out pretty good in the ranges that we've established. But I felt it's important that my thought would be after we broke here, they'll probably want to press it further. And they may, and we'll see, because we do have data out at the bottom of the hour. Matter of fact, let's go back to that. So we do have UK flash PMI manufacturing services here at the bottom of the hour. Let's pull this up. There we go. So this is coming out. So there's still a risk, but overall the dollar's kind of easing back. So maybe once again we'll hold here. But that being said, nonetheless, we've widened the ranges. So we'll stick with the analysis. We said support's going to be 22.17. That's going to hold, and upside will be 24.08. Let's go move into the Aussie dollar. I think in the Aussie dollar, we left everything stayed the same. We didn't even change anything. We left the analysis the same. So there was no changes in the Aussie or the Kiwi. I think a lot of these ended up not being any changes. So look at the Aussie. It's going to stay the same. So low side support is going to be 62.11 and upside is going to be 63.60. We have gone as high as 63.68. So this is going to remain the same right here. No changes here in the Aussie. They're still trading within a very, very tight range. The news even mentioned that too. Let's go to the Kiwi. Okay, and same here with the Kiwi. We did have from yesterday our bias chart support at 59.14, and you can see here they tagged the 59.14. They took it out by maybe 3 pips or something like that. So we're going to keep that the same to 59.14. The difference is the high is going to be 60.10. So far, the high so far right now is right at 60 cents, maybe 59.99. But this will stay the same, 60.10, and the Aussie levels are going to be the same. We'll quickly move into the dollar CAD because we want to show the cable when they release that data. So dollar CAD. Dollar CAD continued its push higher, a potential target. Oh, hey, and we kept this the same, 43.50 with 43.56, immediate support at 42.97. Okay, looks like we just got up to 42.97, and the support's going to be 40.84. So look here. So our resistance remains the same, 42.97, and today's high is, what the heck? Okay, yeah, today's high is 41.97. So we haven't even taken out 42. So this one we probably will have to, you see right here, this high right there, that's going to be as good as it gets now that oil's starting to recede. So it'd be 42.25, and that might even be a stretch if you think about it at this point. Now that oil not receding, but I mean receding as far as the move, the volatility of these moves that we've seen. And the downside is still going to stay the same, 40.84. So that will stay the same. So once again, the dollar CAD, we had the potential to push higher, but now that oil seems to have calmed down and we're trying to even work a little bit higher, going to the June crude at 15.25, things have calmed down. Let's go on and move into the cable and we'll pull up the news. So bear with me. Okay, here's the cable. And let's pull up the data. And there we go. Flash PMI, poll is 31.4, manufacturing 42, and flash services 29. And we are half a minute. We're 25 seconds away from the data. And let's see what kind of reaction we get. 5 seconds. Here we go. Ooh, boy, really took a dip, but not that much of a reaction here in the cable. I mean, and once again, that's what we were talking about the dollar. Remember, we said that, and we talked about that with the European PMIs, that, wow, you know, those really came way below the pole, yet we didn't see bigger dips. And we were saying, if you're long the euro, you'd be like, I might have dodged a bullet, because at this point we're above 776. But the point is that the dollar's starting to recede a bit as oil starts to calm down. So you got that if you're long cable, or you're long, basically if you short the dollar against these currencies, then you've gotten past the storm. Think of it that way. I've gotten past the storm. I mean, these are abysmal numbers. And look at the cable. Didn't even move. We didn't even touch the lows. You see what I'm saying? So maybe we can push up a little bit higher at this point. The dollar buying may have abated. Oh, they're all. Oh, by the way, they were saying on the squawk, these are all record lows on that PMI data. So can you imagine? That's all record lows, and we didn't even challenge the lows for the day, much less to 22.85 or lower. With that, let's go on and move in now to the dollar peso. So the dollar peso furthered its advance amid falling oil prices, as well as a 50 basis point cut. Well, this was the data that we had from the day before, and the reason it's staying the same because I've kept it the same as far as what because we stayed in a relatively tight. See how that tight range from yesterday? So we've stayed there. So the resistance is still going to be 24.61, which really kept the market in check yesterday. We got up as high as what, 24.66, and we closed the day at 24.49. That wasn't too bad. So we had 24.61. That's going to stay the same, and actually 24.61 so far as the high of the day. And support's going to be 24.17. So the same. Moving on to the dollar yen, that's going to be the same too. The dollar yen has just been, I mean, asleep at the wheel. I mean, oh my God, as tight as it's been, today's even tighter. Look at that. So no changes at all whatsoever with the dollar yen. Look at that. I mean, we are not even moving here. So dollar yen, 792 on the upside. Downside 715, and that 715 might even be a stretch, but we're giving it a little bit of a space if we do roll over. We'll move on to the cash dollar index. So the dollar index has a good bid below as we come toward, that was supposed to be, that's all one word, not two word. As we come toward the end of the week, resistance looking out is 880. Well, actually, I'm going to say par 80. And the high today so far is par 61. With a potential of 178, support is 99.94. The difference was from yesterday, we raised the support. So we've moved it up to 99.94. So it's still going to be the same. Par 80. The difference is the support's 99.94. But once again, the dollar's starting to ease back a bit. So if you are trying to say, you know, I'm going to take on the dollar, then here's your line in the sand. You don't want to get above par 80. So with that, let's now go on and move into the cross rates. Let's see where we are today. We tested the lower part of this area here, and we've come back above it. That's key, but the key area, I'm not saying this is resistance, although it's key to get above, is going to be right there. we have to push a little bit higher. But as long as we can get above there and stay, that will be key because we've tested the low side here. You see here, we took out that low, we took out this low. Yep, right now we're above, and that'd be key if we can get above 64.34. But realistically, the resistance where the rubber meets the road is 64.94. And that's essentially where we're at on our bias chart, 64.95. The low we had was 63.68. We've already touched the lower section here, which was 63.73. So the 63.68, which is just below the day's lows, is going to continue to be support. Let's go into the euro yen. Well, we're still, after we defended here, the market rolled over, and here we are pressing the lows again. The low or the support is going to be this low bar here, which is going to be 16.12. And that is disappointing for anybody that was stepping in thinking that held. Upside is going to be right there. You see these touches off of here and actually coincides with today's high, which is 1682. Might be a lot higher, but if this market were to turn around, if it could, it'd be 1682. Let's go into the euro odd. Well, we're revisiting, apparently because of the euro's weakness and also the Aussie, which has held up okay. And don't forget the demand that we're seeing for Aussie paper. So thus we're pressing back here. The support is going to be this key level again. That's where we'll trigger them if we go lower, which is going to be 70, let's just call it 70 cents. Resistance. Let's just go with that bar right there. 7101. Well, we've rolled back over here, so that's going to be resistance. You see those closes right there? That's resistance, 81.94. Support, well, clears a bell right there. 79.78. Upside, same thing, clears a doggone bell. Look at that, 68.69. It's amazing, and then again, it's not. How these markets respect the levels. And once again, I always put my levels through the bodies. As Blake says, many ways to skin a cat. You do it the way you want to do it. I'm just saying what works for me. Once again, you can see it right there. Support, once again, we're just going to go through the body, which actually it tends to be the low for today, which is going to be 67.71. Not bad, because the previous high and low have basically caught today's session. And we do the bias chart, rolls to the next 24 hours. So we had 68.55. The high today was what, 68.69. Yesterday we had, rolls in 24 hours, the low 67.74. The low today is, well, 67.74. The only difference is we're going to move this just because of the close there, the open. We're going to move it to there, which is 67.69. 5 pips lower. Let's go move into the guppy.
Fear raises your cortisol levels more than anything else. There's a lot of fear in the streets.
Guppy is kind of interesting, although we've been dipping lower. Remember we talked about this being kind of like a rounded top. Which would pretend for lower prices, maybe all the way down here, but it's making a stand here. So you see these touches right here. That's going to be support right there. 32.50. It'll be a stretch if he can come up here. Doesn't mean he can't. You can see the body touches right here. 33.39. We're actually going to go with 33.39. The reason is the real resistance comes in here at 33.88, but 33.39 is where the rubber's going to meet the road, where you can see it already. We saw some pushback. If we can get beyond 33.39, that will allow this market to pop up. So we'll go with 33. We actually had 33.36 yesterday. Okay, so we're just moving it up 3 pips. And support, we just put it to 32.50. We'll keep that there. Let's go on and move in now to the starting odd. We thought we could get a little bit higher because, you know, Aussie was weaker, but remember now Aussie's kind of come back because the commodity currencies are coming back a bit as crude oil has kind of, you know, I don't want to say flattened out, but kind of the craziness has kind of eased back a bit. So commodity currencies are coming back. Hence, although we thought we had the potential to move higher, and we did come up. We had 95.46 as our high. It actually came all the way up to 95.99, basically 96. But we've turned around and rolled lower as the Aussie's gotten stronger. So because of that, we're actually going to have to. Well, this is where the rubber meets the road, is right there. So it's going to be 95.26. Although I'm not sure if it'll make it all the way back up there, but that will be it. 95.26. Support. See all those touches here? And we did come down here. Right there. See this coming across here? See how it comes across 93.88. That would take out the day's lows. But we're coming into the end of the week, so if we were to take a roll, if we rolled over lower, you'd see some demand at 93.88. We'll stay with that or go with that. And that's the bias chart for today. So thanks for joining us here on the European Crossover webinar. We'll see you in the chat room. Have a good day trading.